Markets world over have been correcting, and India also has seen a share of significant correction from the earlier levels. FIIs have been relentlessly selling, and so have been HNIs in Indian markets. We have seen the index Nifty come below 19,000 levels, and apart from a bit of recovery here and there, the selling does continue. There are good news and bad news in overall the situation. I think the good news is fundamentally nothing has changed in India, whether in the macro or in the micro segment. Indian market, Indian economy continues to remain resilient. Globally, there are a lot of stress and a strain. Geopolitics, of course, is the biggest culprit with what's happening in Israel, Gaza, and Palestine. Whereas the conflict in Ukraine also continues. We have seen US yields going up continuously, and also the crude oil prices have been moving up. So obviously, the global investors are in a risk-off mood, and that is getting reflected in their continuous selling in Indian market. Now, after and in spite of all this, I think the fundamentals of India continues to remain strong. The only challenge for India is if the crude oil prices continues to move up and consistently remains above $90 per barrel, that doesn't augur well for Indian economy and Indian markets. Now, as long as crude oil prices remain manageable within the around 85 range, I think India economy and Indian market should continue to do well. Leave aside the short-term challenges, the short-term volatility, which is being caused by relentless FII selling. As far as the specific market action for today, I think large corporate results, Reliance Industries as well as Maruti is expected today. As far as Reliance is concerned, we believe that the quarter gone by should be pretty good, except Petchem, which has seen a lot of softness. All other segments should do well. Singapore GRMs have improved, and that should lead to oil and gas segment of Reliance doing pretty well. ARPUs have increased, as well as customer additions have been robust for Reliance Jio, and that should come out with a better set of numbers vis-a-vis last quarter and YOY quarter. As far as retail is concerned, significant store additions as well as incremental footfall in the stores should lead to robust set of numbers. We should also wait for the management commentary on green energy business and the plans for further deployment in this area. Overall, it should be a good set of numbers for Reliance Industries. In any case, if one looks at the future potential, I think Reliance Industries definitely looks attractive to buy from a long-term investor's perspective. The other company coming out with their quarterly numbers would be Maruti. Again, a good set of numbers are expected, primarily on the back of significant sobering of the raw material prices and overall the cost structure. Now, that should help Maruti. Beyond that, I think the pickup in their SUV segment, which was the pain point, should do well as far as Maruti is concerned. Otherwise, we believe that Indian market should, investors in Indian market should be careful while buying into IT, niche IT companies catering to segments which are growing rapidly, like travel and tourism, engineering, production, should do well. So persistent systems, rate gain technologies, Coforge can be bought at current levels for long-term hold. Other sector which we like should be construction, infrastructure, and will include building materials, cement, and companies in this space can be looked at for a long-term hold. Overall, market will remain volatile in the short term, but medium to long term, we continue to maintain our positive bias. Thank you.